Everyone, welcome back. Lucid CEO weighs in on Tesla NACS. States priority should be on ultra-high voltage charging. Based on the reports, it would appear that automaker and EV charging company left, right and center are adopting the Tesla North American charging standard. Amidst these updates, Lucid CEO Peter Rawlinson has shared his thoughts about the matter as well as the NACS versus the CCS debate. When Tesla announced that it would be opening up its charging standards to industries, it highlighted that the NACS is half the size and twice as powerful as the combined charging system, that's the CCS, which is used in vehicles such as the Lucid Air. Now, while speaking with the Wall Street Journal, Lucid CEO Peter Rawlinson seems to have reservations about adopting the NACS. That's for the EV startup vehicles. As Rawlinson noted, the priority must be on high voltage charging instead of the plug that is used to charge the vehicle themselves. So we've got a little video here and we do want to take a closer look at this video. This is a tweet from Jeff Tutorials. While the rest of the EV industry is adopting the North American charging standard, Lucid Motors and CEO Peter Rawlinson are refusing to switch until Tesla enables 1000 volt DC charging at superchargers. Wow, so that's even more interesting. They have demands. So why doesn't Lucid poll their customers to see that they prefer instead of making the decision for them? Very interesting. So let's check out this clip.
NACS versus the CCS standard, because really what is the difference between those two? We're talking about a plastic plug here. That's the difference. It's a plastic plug with bits of copper in it. What actually supports that plastic plug in terms of the infrastructure and what it's connected to is very relevant to the US consumer and a very important topic for the growth of the EV in terms of its value to the American people. I think it's very important that when we look at US taxpayers' money here and how it is put to best effect, that it should be placed into a charging infrastructure which is future-proofed. And that means an ultra-high voltage charging standard, 1000 volts. That is the future for EVs. And really, it doesn't really matter whether that plug, the way that high voltage enters the car, whether it's through an NACS or CCS a plug, that's almost beside the point here. What's really important is that we go for this efficient, high voltage, high power charging. And why do we need high voltage?
So this was a meeting with Wall Street Journal, of course. Now, to be honest, I'm not an EV owner, never owned an EV car. I've driven an EV car. In fact, I've driven 2 different EV cars, Tesla and a Polestar. Very good cars to drive, by the way. But to be honest, I don't really know the difference between the North American charging standard and the CCS. I don't really know the difference. But I will be doing my own research to figure out what's the difference and what's the benefits, to be honest. Tesla usually goes for the more simpler option. That's what Tesla usually do. But it'd be really interesting to see if there's other automakers that are also going for the Tesla option, or are they going for the Lucid option, such as the CCS. Manufacturers such as Audi, Porsche, Polestar, Rivian, Neo, Li Autos, what options are they going for? That'll be very interesting to figure out. Also, companies like Volvo. I suppose Volvo will be doing the same thing as Polestar because Volvo owns Polestar. But yeah, it'll be very interesting to figure out, especially since I talk about EVs and EV stocks quite often. Yeah, I definitely need to do some homework on this subject. But the important thing to understand is that Tesla has the biggest charging network globally, I believe. I don't think there's a word to describe the Tesla charging infrastructure right now. No one is close, which is why companies such as Ford have literally just accepted defeat. I believe VW also developed their own charging infrastructure, but it felt more like VW did that for political reasons rather than genuine concerns. Remember now, VW made that announcement years ago, back when they had the Dieselgate. They made that announcement, and I think VW made a lot of announcement about building all sorts of electric vehicles. Yeah, VW made a lot of announcements, but I'll But I always felt like that was just political, just to get back into people's good grace, just to win the market over again, because there was a lot of bad press for VW as a company. So the individuals in that company who might have had nothing to do with the scandal had to still deal with it and confront their employees and find a way to move through all of that. That couldn't have been easy, but VW certainly made a lot of promises. A lot of promises. But aside from that, some more information on Lucid. Will the NASDAQ 100 kick out Lucid Motors? Speculation is running rampant on Wall Street that Lucid Motors will join Rivian in losing its place on NASDAQ 100. Indeed, Rivian is set to be replaced by ON Semiconductor after shedding nearly 40% of its share value in just the past 6 months. Lucid has also been on the decline, down more than 75% from early 2022. So after Rivian's unsanctuous departure from the NASDAQ 100, it seems another EV maker may be on the way out, which is Lucid. So it's saying here, Lucid's market capitalization is currently around 13 billion. Shares are down more than 75%. Like Rivian, Lucid also commanded plenty of Wall Street buzz in 2021 due to its future growth potential, only to lose much of its value as investors found out that EV companies found the other EV companies to bet on, such as Tesla, such as Li Auto. So Lucid is down from a peak of $55 in November 2021. That's major. It's around $6 right now, in fact, for the share price. Yes, just around $6 right now for the share price. So imagine if you'd invested when this share price was around $50. I would feel really bad for you right now. I mean, I always say cheap shares are good. When you buy extremely high and you lose that much, that's got to spin your head. You know, it's one thing to invest in Tesla and it loses half of its value. It's Tesla. That's going to happen. It will recover eventually. However, for Lucid to buy at $50 and now the share price is $6, so for every $100 that were invested in Lucid, investors now have $12. So whatever invested, they now have 12% of that investment. Wow. So if they invested $100 million, they now have 12 million. Yeah, this is where you avoid investing in companies like that, because what are the possibilities that it could lose you that much money? And I always say you haven't lost money unless you sell. Let's be honest, it's going to be a long, long time, maybe never, for Lucid to recover back to $50. And it's looking like the way it's going, yeah, it's going to become even more cheaper. Now, just last week, Lucid announced a $3 billion stock offering to address production hiccups. The news, unfortunately, fell on sore ears. Investors caused a 24% drop in share price following the announcement. That's a tough one. You have to realize there are other EV companies right now that are doing far better than Lucid. If there's an investor who did invest $100 million and only have 12 million right now, they sold that 12 million and invest that in Tesla just before Tesla started to go up in the last couple of months, investors would have almost doubled that money by now. So better chance of investing in Tesla and making your money back than in keeping your money in Lucid, which is losing value. But yes, when I speak of Polestar, if you buy Polestar at like $9, it's about $3.60 right now. So it's lost more than half its value for sure. It's not lost like 85% like Lucid. So Polestar and Lucid, very different situation. So for all the people who invested in Polestar and thinking they have it the worst, imagine investing in Lucid at its highest price. And the thing about it is that many people who invest in these electric car companies, they don't really understand the electric car market. It's extremely capital intensive. Extremely capital intensive. It is a very difficult market to adapt to adjust to, and to operate in. Now, I've made a video on Lucid $3 billion stock offering. Thankfully, that video is on our channel. I uploaded it a couple weeks ago. Please check it out if you'd like to learn more about the $3 billion stock offering. But that is it for today. Thank you for watching. Subscribe to see more. Leave a like, leave a comment. What the hell is happening with Lucid? Seriously, that's the big question. Will they recover to $50 anytime soon? Let me know your thoughts. Thank you for watching, and I'll see you in our next video.